Hi, everybody. It's Artist Porter, your favorite Michigan Realtor, and welcome back to Talk About It Tuesday. I got my friend back, Kyle Caruso from Legacy Mortgage. How you doing, Kyle?
Fantastic. Happy to be back on Talk About It Tuesday. I'm excited.
All right. I'm happy to have you. How's your week been going? Let's go.
Been great. Been great. Last night we seen the Lions get a victory. So, you can't have a bad day after a Lions win against a pretty good Baltimore Ravens team. And I know that you're a brand new fan. I believe I saw on social media.
Brand new fan, but I've always been a fan of just good sports.
There
So,
you go.
brand new fan.
Welcome.
All right, thanks. So I got Kyle here to talk about an update for mortgage rates right now. So we start simple and we're just going to start with question number one. What exactly is a mortgage rate, Kyle?
So, in simple terms, a mortgage rate is just basically the thing that is going to influence how much money that you're paying over the life of your mortgage on interest and what your mortgage monthly payment is going to be. So, obviously, lower the rate goes, less you pay in interest. The higher the rate, the more you're going to pay in interest.
Exactly. And what factors determine the mortgage rates?
So, the factors that determine the mortgage rates are pretty, pretty much. I'll start with, in terms of your residence type. So, is this going to be a primary residence? It's going to be an investment property, or is it going to be like a more like a second home? So the investment properties, they're going to be in second homes are going to be a little riskier. So that's like if things went bad economically, what is the person going to let go of first? Not their primary residence. So they view it as
Right.
less risky. Um, Outside of that, it's going to be terms of what what your credit score is going to be. Better credit for a conventional loan, the better interest rate you're going to get. FHA and VA government loans, they do not discriminate against credit score, so that's good news. Um, and then outside of that, just kind of the down payment that you're going to be putting down. So typically if you're going to be putting 25% down, that's going to give you the best interest rate. But obviously, there's a lot of benefits to both. Putting less down and maybe investing some points into that lower interest rate. So we'll touch on that a little bit, but outside of that, the biggest what drives these interest rates is going to be Federal Reserve and how inflation looks, the economy, all that good stuff.
Okay. So speaking of credit scores, how does that affect the rate that you get?
So in terms of credit scores, like I said, with an FHA or VA loan, government loan, they don't discriminate against credit score in terms of what your interest rate is going to be. So that's good news there. Essentially, with conventional, the higher the better. That's going to be typically they see like they view a perfect score as 740 or above. So better credit on conventional is going to get you the better interest rate. Um, and yeah, I mean that's there's not a bad loan program out there. Like the FHA and VA might be a little bit less in
Mhm.
interest rate versus a conventional loan. There's pros and cons to each, but obviously the best fit for you is going to be situation case by case basis. So
Exactly. And then what's the difference between a fixed rate and an adjustable rate mortgage?
fixed rate, it's just as it sounds, it's going to be fixed for 30 years, 25 years, 20 years, 15, all the way down to 10 years. So there's a broad range of programs available on that in terms, but essentially you're not that interest rate will not change unless paid off your house and then they have no interest rate, or you refinance your mortgage and do a lower interest rate or take cash out, whatever. But that's fixed for a certain period of time. Adjustable rate mortgages, ARMs as they call them, that they're also fixed for a portion of the loan. So most common right now is going to be your 5 year adjustable rate mortgage. So that is fixed for 5 years. And then after the 5 year fixed period, there's an adjustment period, usually every 6 months. So essentially, it just adjusts on based on what the market is. So if you had a 6% interest rate, and then after 5 years, it was a 6.5%, your first adjustment period would go to that 6.5%. If you locked in a six on that 5 year and down to 5.5%, it would adjust down as well. So it just goes off what the market is after that fixed period for adjustable rate mortgages.
Okay. And is there caps on how much they
There
can
is
go?
caps, yes. So it can go up or down. A cap portion. So it's not like you're going to get a 6% rate and hey, rates are 12% in 5 years,
Right.
and it's not you're going to be capped, so you can't go above a certain portion.
Okay, good. Um, how do down payments influence your rate?
So as I said, in the perfect world, especially for a conventional loan. Really only for a conventional loan, but 25% down is going to be where you're going to get the best interest rate. Um, but as you see more common as the market kind of steadies out, as far as rates go, you can actually put down less. Sometimes a higher loan amount gets you a better interest rate because you're borrowing more money. Um, so a lot of people, what they'll do is if they have 20%, 25% to put down, they'll put down, let's say, just 10% right now, get a
Mhm.
higher loan amount, get a lower interest rate, and then do what's called a recast, and they can put that money on the principal that they're going to put for the down payment. It lowers the monthly mortgage payment. They get the lower interest rate. It's a win-win. So there's definitely ways around, doing that if you don't have 25% down. So
Okay. And Kyle has the strategy, so there you go.
yeah.
Um, what role does economic conditions like inflation play?
So with inflation, that's the big thing you hear is they're not, they don't want to lower interest rates until we get down to like 2%, under 2%. Because it's a when inflation is high and the economy is high as well, you're going to have higher interest rates. And when the economy gets a little bit slower and inflation gets a little bit lower, that's when you're going to have lower interest rates. So it's really the big thing is it's tied to inflation, jobs report, how much we're investing as a country in the mortgage-backed securities. So definitely a plethora of different options, but I wish I had a crystal ball. Wish I could say, but we don't.
Oh man, if we did.
Yeah, right.
Historically, are today's rates considered low or high?
Historically, we're considered very low. I know that sounds crazy because we had 2020 and 2021, but I mean, you probably hear parents talk about it. Like there was a certain point when people we had 18% interest rates. Certainly, you know, house prices weren't where they are today, but still a 6% interest rate, 6.5% interest rate. That's historically low in our book. So if we can get down to low fives, honestly, that would be a perfect world. That'd be great for everybody.
Okay. And people like to tend to think about the most recent future and not overall. So it's good to have that big picture that historically it's not really necessarily so high.
Exactly.
Um, how much can even a 1% difference in the rate impact your monthly payment?
So that's a great question because I mean, especially a great question for right now because there's a lot of people that bought houses in the last year that have above a 7% interest rate, and right now with where the market is, they can refinance to get it actually lowered by at least 1% at the moment.
Hmm.
So if we're talking, in numbers sake, a $250,000 loan amount, difference between a 7% and a 6% is about $165 a month. So I mean, you add that up, that's definitely big savings. That could potentially be your extra mortgage payment for the year. It's a win-win.
For sure. That's a big difference,
Hmm.
We talked about inflation, everybody's feeling it. That's almost $200 a month. So as a
That's at least like a small amount of groceries.
yeah, very small. Very
Every
small.
little bit helps.
Speaking of different strategies to help pay your mortgage, someone was discussing the strategy about paying one extra monthly payment a year and how that can help you pay off your home loan earlier. Can you
Yeah.
expand on that?
Yeah. So, great question. I mean, the thing is, when you get a loan, for 30 years, I know it sounds daunting, but there are ways like this to lessen that time frame. So one of the biggest ways is, like you said, putting down an extra mortgage payment per year. Believe it or not, that would lower your 30 years. That would lower it to about somewhere in year 23 that thing would be getting paid off. Just one extra payment. And if you're not as disciplined, um, you can always do bi-weekly payments. You can set that up with your servicer where half your mortgage payment is going to come out every 2 weeks, and it's about 26 half payments versus 12 monthly payments. It adds up to at least one extra payment per year. Same thing, it's going to knock about 7 years off the mortgage. It's a no-brainer. We're talking hundreds of thousands of dollars in interest here. It's nuts.
Okay, look, this is my sound effect. Boom.
Boom.
So that's a bomb he's dropping, guys. That's why I keep Kyle around. He's always got good information. And, that's practical things that, sometimes people don't know that we want to learn and can benefit us in the long run. So appreciate that.
There we go.
What's the best way a borrower to secure a lowest possible rate right now?
So the best way, and obviously I know it's not the easiest sometimes, but just monitoring that credit score. Make sure you're keeping your credit as high as it possibly can be. Um, big thing is on some of these quick tip here, some of these credit cards you have. Make sure that the balance is going to be below 30% each billing period. That's going to help move the needle a bit. Obviously, bigger down payment. It's tough to have these days with where everything is at economically, but 25%, that really does get you a low interest rate. And the biggest thing is too is it's not just you know, it's a 30-year process, 23-year process, however long you get your loan for. Get in a house now. I know people tell me like, hey, we're wanting to wait until these interest rates get lower, which I totally get it, but at the same time, I do not because you know what's going to happen, artists, when these rates get lower
Yeah.
and everyone is storming the streets here. There's going to be a lot of competition. Home prices are probably going to go up again, believe it or not.
Mm-hmm.
And if you get in now, you're going to have that built-in equity when they go down. You can refinance. So
Yeah.
when we do refinances for our clients, we're waiving our underwriting fee. We're keeping it cheap on the refi, so that just get them the lower interest rate, lower payment, and it all works out.
That's good old elementary supply and demand. When the demand goes up, so is the price. So, I appreciate that. Is
Yeah,
there anything else that we can talk about mortgage rates?
you know, like we said a little bit, it's we got spoiled in 2020, 2021. Believe me, like a 5.5% rate, that's not bad. I've been doing mortgages for 13 years. For the majority of it, and we've been in the fours and low fives. So it's not as crazy as people think. These 5% interest rates, it should be happening here soon, and it's a great time to buy.
Right. Don't find more reasons to talk yourself out of home ownership. I mean, it's very
Absolutely.
important. So, I just want to thank Kyle again. Hopefully, we'll have him back on. We will have him back on.
I'll be
Duh.
back.
Thank you so much, Kyle, for having Talk About It Tuesday, and we'll see you next time.
Yeah, thank you so much for having me. If you guys need anything at all, again, it's Kyle Crusoe with Legacy Mortgage. I can be reached directly at 734-925-6424.
And he's
And
got the strategy, guys. He knows how to help you,
we
and
got
he's
it.
more than happy to just give you an overall view so you can make a plan. You may not be able to do anything today, but if you put that plan in right now and you put it in writing and you get moving forward, that'll get you on your way. So,
Absolutely.
so it's been Artis, your favorite Michigan realtor, and Kyle Caruso from Legacy Mortgage, and you have a great day.
Thank you, artists. You guys have a good day.